Hello everyone, my name is Charles Moon, and I am just here to give you a little bit of market commentary on some extremely popular names. There's panic in the streets, the market's down 2-3 days in a row, NASDAQ's getting destroyed. What in the heck are we going to do? Hey, in my opinion, because of the euphoric buying and opportunity, this is all turning into great short-term buying opportunities. And right now on screen, I have Netflix. I want to point out Netflix. The overall long-term trend is considerably to the upside, right? One year low, 173.73. 52-week high, 423.21. Hey, I'd say it's pretty bullish. Yeah, in the short term, it's seen some weakness. We've actually deviated and started now what looks to be a reversal of the longer term trend. As you can see, coming off that weaker high at the 52-week high, we slammed, made a lower low, lower high, lower low, lower high, lower low, and then also we made a higher high. So what doesn't fit in this picture? Aha, the higher high. Now, pardon my voice. I know it may be a little difficult to hear me. My voice is pretty much shot because Prosper Trading Academy went to the Cubs game in Milwaukee, and we made our presence known in supporting our team. I do want to point out that Netflix was also maintained at RBC at outperform, and the price target was lifted to 440 from 360. That's not a small jump in price target, guys and gals. They're expecting this stock to make a new all-time high. Now, for anybody who knows me and my thoughts and feelings on analysts, they clearly know that I don't really respect whatever they have to say. I'm more about the technicals, the price action, and the short-term sentiment. But we've seen this reversion back, and it actually hit the hull. The hull was an incredible trade yesterday at 337.64. Current price is at 347.51, so already a nice, almost a 10-handle move. And the highs of the day today was at 356. So you could have already been looking to take profits. Now I do want to mention that the 100-day moving average is at 355.89. That's pretty critical considering that the highs of today was pretty much right on that stupid little pink line. So outside of the hull, what's setting up today is what's called an inside bar. And I'm going to point out another name that has a very, very tasty opportunity. But if we get this trigger point, which means if this is the high at 356, the 1% trigger point would be at 359.56. That could lead to the jump. And realistically, I mean, I really suspect that Netflix has a great chance of filling the gap here, and that's all the way at 400. So if you're looking to be a player, I mean, 340, well, the holds today at 339, ATR trailing stop at 323, inside bar set up, and if that triggers to the upside, boom, that's great upside momentum, value buy in the short, long term with a great reward outcome. If it ends up triggering down, you know you're going to have to get the heck on out. You could escape before that ATR trailing stop, lick your wounds, and go on to the next one. What is the next one? It's Amazon. This is a little different. We're talking about ridiculous levels and complete, in my opinion, over-evaluated price. But yet, it's still bullish. The gap fill price here on August 28th was at 1932.82. The low of today came to 1935.21. I was speculating that this old high, this little double top, whatever, shelf, plus the 20 period moving average, which was right here. It didn't hit that price, but let me double check where it was. At 1929.29 was all going to be a major point of reference. 1925 is a pretty clear-cut price. That was the old high here. It's an institutional number. It's clean and even, and it's very rare that a stock like Amazon will hit that particular price. But yet, really, is it? I mean, if you look through history, and it's going to take some detailed levels, but if you notice 1880.05, all-time high 2050.05. So there's definitively institutional interest in these particular levels. That was where I was looking to be a buyer, already above 1951. This may not come back. If they hold this level, and realistically, as long as they don't cross over 1912 to the downside, I still love the upside opportunity. And if you think about getting into Amazon right around 1925 to 1930 with a stop at 1912 with the upside of $2,050, that's a great reward to risk ratio. I am still bullish on Amazon. Last but not least, Workday. I mentioned Workday a while back. I said I was extremely bullish. Workday only ended up going based on this particular range from 126 to 157 in about a month and a half. What a surprise. Well, it dumped pretty hard coming off of earnings. I get it. I totally get it. But you can see it's been pretty uber straight line up bullish. Of course, when risk off trading is going to happen, it's going to have a severely adverse effect. Well, today it's up 1% on the day where the NASDAQ is down 95 points. And yes, it's showing some weakness. No, I don't want to buy blindly here. I am yet again looking for the inside bar. The inside bar is paramount. It's a trigger-based system. You don't buy without it actually triggering and getting that validation. That high is at 146.24. So let me pull up the price. Plus 146. So we're looking at around 147.70 as a trigger point. We get that trigger point, we're looking to place our stop just slowly below 140 and trying to play it to 157 or higher. So it's not the greatest reward to risk ratio, but still it's a favorable reward to risk ratio. Great upside short-term opportunity, and I'm going to be quite honest with you, I would be pretty surprised. I would be surprised if we get three more days of down NASDAQ days. At some point, people are going to look at the NASDAQ and just say, man, there's a lot of short-term value in these names. Why not? I hate to say it, but really, why not? Now, with Workday, it is a confirmation-based signal. It is going to take a day where we see the NASDAQ reverse. The reversal day may only be 40 points up. It may be 150 points up. I don't know. But we're not looking to buy unless these specific mechanics, it won't happen today, it'll actually happen tomorrow. And if we start getting the bounce, the consolidation, and then the reversal, well, this day here, if you take a look, 122.30, 122.30, that was a reversal day that took place. That was an inside bar day that took place, and that was an inside bar right here on August 3rd that led that trigger to that 157 price. Previous history has proven that in this stock, when inside bars trigger, they tend to be pretty favorable. We'll have to wait and see. And again, since it's a validated signal, meaning it's a trigger-based signal, we need the validation, we need the stock price, which is above the current price right now, to actually trade. If it never comes back and continues lower, there's no blood on our hands, there's no dirt, there's no sweat, there's no trade, because we would have never gotten in without that validation. So keep that in mind. Now, folks, as I wrap it up, I do want to mention that stock and stock options trading does involve a substantial degree of risk. It may not be suitable for all investors. Past performance is not necessarily indicative of future results. I know that a lot of people are looking at these names. Hopefully this information provides some insight in the short term of the possibilities and what you're going to be looking for, and maybe it could be very, very beneficial to your particular outlook. Like I said, informed traders are always ahead of the game, a lot more than retail traders that are not informed, and that's important. It's important to be an informed trader. Folks, take care, and I will catch you next time. Have a great trading week, everyone.